We begin with an earnings alert on Uber. That stock hitting the skids in the after hours after reporting its biggest loss ever. But Uber is reclaiming some of those losses, now down just under 5%. The company's conference call is kicking off at this very moment. We've got full team coverage listening in to that call to break down all the big headlines. Fast Money friend Gene Munster is manning the red phone. But let's begin with Deirdre Bosa and more on Uber's big miss. Deirdre, what are the details here?
Well, Melissa, Uber's results didn't just miss, but they looked particularly ugly next to Lyft's big beats yesterday. Revenue grew just 14% versus Lyft's 72%. And as you mentioned, its quarterly loss was its biggest ever. Now, a large part of that was costs related to its IPO. But Uber is also facing ride-sharing competition in markets abroad like Latin America and India. Competition is even stiffer in food delivery. We saw that play out in this earnings. It's Eats business. CEO Dara Khosrowshahi telling us that they're likely to keep losing money here for years as, quote, there's a lot of capital chasing a lot of growth. As for the question of overall profitability, this is what really matters most to the street. While Lyft was pretty direct on their path last night, saying that last year was in fact peak losses for them, Khosrowshahi was far less clear, telling us, quote, we think that 2019 will be our peak investment year, and we think that 2020, 2021, you'll see losses come down. I think our break even is something that we can push the company to break even if we really wanted to, frankly. He added, no doubt in my mind that the business will eventually be a break-even and profitable business. The question, of course, is when. Guys, digging into that idea that the price wars are easing in ride-sharing, this has been a theme this year, something that both Uber and Lyft have been suggesting. Now, that may be true in the U.S., which is why you might have seen Lyft post really good results. But take a look at Uber's revenue in Latin America, an extremely important market to the company and ride-sharing abroad at large. Revenue actually fell by 24%. The story here is that Chinese ride-sharing firm Didi has been moving in aggressively. Now, in the U.S. and Canada, I should note, which makes up a bigger proportion of the total, but where there may be less opportunity, ride-sharing grew 19%. That is still far below Lyft's number. Now, asked about the shortfall in revenue and gross bookings, Khosrowshahi said the developing markets develop and the law of large numbers at some point catch up with you. Melissa, back to you.
All right, Deirdre, thank you. We'll check back in with you in a little bit. But in the meantime here, I mean, if that is a path to profitability, that's like saying go that way and keep walking. I mean, it's hardly a path, Guy.
I think I'm going to play for the Giants tonight, but it's not going to happen. He thinks a lot of things over the next 3 years, none of which might come to fruition. As the CEO of a company, I think you have to have a little more certainty in something. With that said, you know, I'm glad Deirdre brought up Latin America because that's their second biggest region, down 24% year over year. That's a big deal. Now, granted, U.S. and Canada is 4 times the size. But when you have those kinds of those kinds of losses or declines, that's problematic. On top of that, the fact that they don't seem to have a path to profitability, and last night we heard Lyft may have one, makes you sort of say, you know what, Lyft is actually a better quarter last night than we actually probably thought at the time. And it just goes to show that Uber's probably continues to be a no-touch.
Yeah, so what I think is really interesting is that, you know, it really is a tale of 2 days here. And these are two very different companies. Despite the fact every Lyft you get into, that guy is probably driving for Uber. And every Uber you get into, that guy is probably driving for
Adami?
Lyft. Also,
lowercase.
But I guess the point is that if you believe in this whole rideshare business and you think it's going to be something that's going to continue to grow for years and years, and then you believe in autonomy, right, and the same sort of thing, you know, looking at Lyft, it's just a pure play on that in North America. And we know that that is a market that is much more easy to model for a whole host of reasons, okay? So, you know, these 2 quarters just tell you that I'd much rather take a shot at Lyft right here if you think that this is a technology that you want to be exposed to for a long time. The losses at both of these companies are staggering, and this is going to be a story we're going to be talking about. There's going to be tons of volatility quarter to quarter about losses that we see for years to come.
Deirdre was talking about investment, and it's not just investment in the moonshot businesses and in food delivery, but they're also investing in the autonomy part of it. Lyft is doing joint ventures, which seems like a much better, safer way of approaching it.
I think they're playing defense. And you know, you're talking about the pure play versus the other play, and where, you know, look, in North America, you also have robo-taxis. I mean, GM's getting into the space. You have a lot of very significant players. So, yes, you need to have international. Didi, by the way, I would not discount the Chinese on this. I think they're a very real competitor. But think about where we are day over day, both in terms of what was said by Lyft and what was said by Uber, and what the market has done. Uber was up 8.5% today, folks. So if you think about it, so you're up 3% over the last couple of days, having digested digested earnings that could have been problematic. I don't know where we're going to trade tomorrow, but judging by how the market has at least interpreted the news and the call to this point, it's not a huge surprise that Uber's pulling back. Yes, the profitability needed to be different. Yes, industry trends that Lyft talked about yesterday, you didn't hear Uber talking about, and they sound like they're playing defense.
What does this tell you, Pete?
It tells me that Lyft is winning right now.
In the
Lyft
US.
is winning in the U.S. You look at the revenue growth that they showed, even if we take out Latin America. Let's look at what the growth is for Lyft right now, what we heard yesterday, and the road to profitability seems to be a little bit more clear, at least right now, from Lyft than it is from Uber. So I think this sort of tells me what we were thinking last night, which is, hey, Lyft is probably taking a little bits and pieces away from Uber. And granted, Uber was much larger, but they're taking a little bit of that market share away. And because of that, they see the path to where they can make money at some point in time. I'm not as sure as Deirdre was in terms of talking about Uber and the profitability. When? I don't know. When do we actually still see that? I don't know that was very clear. I thought that was actually pretty foggy in terms of, oh, we will make money. But that's basically what they said. We're going to make money someday. When? I mean, that's the issue. I think Lyft showed us, hey, we're not that far away from being a profitable company.
To be fair, for a company that recently went public, is supposedly a high-growth company, you would forgive them for not having a path to profitability. Why is this case different?
And how different is Lyft?
Because their growth is not as strong?
Right. And how long ago did Lyft IP? I mean, these are very similar companies. And I know Lyft came first, but still, Mel, why does Lyft have a better vision going forward right now than Uber? That, to me, is puzzling.
I think the way public companies and private companies are coming to market today, I think the bar should be profitability by the time they come to market. So private companies are paid to have growth and to be basically investing in the future. But the extended duration of how these private companies are incubating in the private markets, having raised record amounts of capital, by the time you come to the public markets, I think you need to be coming with a public model that is profitability, because the private markets don't care.